If you're feeling unsure about this bull market, you don't know what Bitcoin's going to do, what altcoins are going to do, September is typically a down month. Well, the news and data that we got over the last 24 hours is going to enlighten you, and I'm going to share that news with you guys because it does predict one thing, which is bullish for this market. So if you guys are new to the channel and you want to stay up to date with crypto, well, make sure you subscribe so you don't miss videos like this. Smash the like button. It truly helps out the channel, and I can't thank you guys enough. And let's talk about the data that came out and why it's so important. So yesterday on a Friday, we got some news about how the US economy is doing. To keep it short and sweet, we know that the Federal Reserve, the people, Jerome Powell and his committee, they basically decide what happens to interest rates, whether or not they stay the same or they go down. And basically, interest rates allow for people to have more money in their pockets. Now, yesterday's data, we had the US unemployment rate come in line with forecasts, and that forecast was a 4.3%. As we can see, nothing has, changed in terms of what analysts were predicting. But what we can see here is since July, we've had an increase in unemployment rate. So in July, it was at 4.1%. In August, it was at 4.2%. And now in September, it's at 4.3%, which basically shows that the US unemployment rate is continuing to go up, and it's now been going up for 3 months. So that basically gives us the clue that the US labor market isn't doing all that well and isn't doing as well as what the committee or the Federal Reserve had once thought. Now, they also have revised the amount of jobs, new jobs that were created over the last few months. Crazy amounts of revisions, a lot of jobs actually not being created, which again emphasizes that the US labor market isn't doing all that great. And as we know, the Federal Reserve has the mandate to balance out the labor markets as well as the inflation. So that is the biggest, challenge that they have. They have to balance those two. And with the data that came out yesterday, we have a massive switch in the forecast for the September FOMC meeting. That's happening on September 17th, which is just a week and a half away. And if we look at current predictions after the data that came out, we now see that there is not even a question about the Fed not cutting rates. We have analysts predicting that there is a 92% chance that the Fed is going to cut by 0.25 basis points, or there's even now an 8% chance that the Fed cuts by 0.5 basis points. So just a few weeks ago, if you were in our private community, we've been tracking what's happening with these odds. We've been tracking what's happening with inflation, with the labor markets, and putting it all together so that you are aware of what's happening in the US economy. Because lo and behold, putting more money in people's pockets, lowering interest rates is bullish for risk on assets. We've seen the stock market at all-time highs. We've seen Bitcoin, Ethereum reach new all-time highs, and that, interest rate cut is going to be bullish for the markets. Now, there's obviously the other side of the medal where people say that there might be a sell the news event. That is even more bullish in my opinion, because if there is, well, as I've said time and time again, I do believe that Q4 2025 is going to be a hell of a quarter. So that's what's recently happened to the predictions. A guaranteed essentially rate cut in September in a week and a half. Whether or not it's 0.25 or 0.5, that is left to be seen. But this is bullish for the markets. So if we summarize this and we make a thesis out of it, well, let's take a look at the stock market versus the economy. Because like I said, stock market, the S&P 500 is making new all-time highs, even though, people are saying inflation is still rather high. But we are going into rate cuts with rather high inflation, which is still, a little bit higher than what the Fed wants of 2%. But ultimately speaking, we're going right into those rate cuts. Stock market is at all-time highs, and they are basically saying here that despite a very weak jobs report, the S&P 500 just hit new record high and is now up 35% since the April 2025 bottom. And if you are someone that panics when you see red, especially in a bull market, I mean, you have to rewire your brain, because The S&P 500 is literally up 35% since the April crash. That is on an index, so individual stocks can be up even more than that. We've seen Bitcoin, Ethereum rally like crazy, and even some altcoins as well. Now, here is the important part I wanted to highlight of this tweet. The jobs report was weak enough to solidify rate cuts, but not weak enough to cause panic on Wall Street. And the market knows that rate cuts are coming into higher inflation. Those who own assets will win as the macroeconomy enters a new era. Those who don't own assets will be left behind as the wealth gap widens. The stock market knows this, and that is why we are seeing new highs on the S&P 500. And I do believe that these rate cuts, even though there perhaps is a sell the news event, there are going to also be bullish for cryptocurrencies. And if we look at some of the history behind what's happened in the past when rate cuts happened, well, we've had new all-time highs for crypto as well. And I also want to point out that, of course, we are still looking at quantitative easing back in 2021. Right now, it's still quantitative tightening, meaning that the Fed is continuing to reduce its balance sheets, but potentially we get more news on that in a week and a half during the FOMC meeting. So if we take a look at Bitcoin versus the federal fund rate or the interest rates, it is very interesting to see the relationship that we have here. We've plotted the price of Bitcoin versus this interest rate. Right now, we are at about 4.5% for the interest rates. And if we take a look at what happened back in September or August of 2024, we had the first rate cut where the federal fund rate was at 5.5% and they cut by 0.5 basis points. Now, this was the first cut that we saw for, over a few years. A lot of bullishness happened when this cut happened. If we take a look at what was happening with the price of Bitcoin, we essentially had a 6-month, window where Bitcoin wasn't doing a whole lot. It went to a new all-time high around 73,000, dipped all the way to 50,000. But when that rate cut happened in September, what do we see to the price of Bitcoin soon after in, October of 2024? We had a massive rally to the price of Bitcoin as interest rates were coming down. So the Fed cut about 0.5 basis point in September and did another cut in October and another cut in December. So it went from 5.5 all the way to 4.5 and has been at 4.5 since the last year, or almost the last year, about 9 months. It's been at the same level. Now, during that time, we see interest rates go down, Bitcoin's price go up, and then we have a flattening of the interest rates, and Bitcoin, went down, went back up, and now has made new all-time highs, even though interest rates have remained very high. So going with that thesis, if interest rates are lowered and potentially lowered even, twice before the end of 2025, we could continue seeing more pressure and more upside to Bitcoin soon in Q4, in my opinion. Now, if you look at what happened in 2021, it was a little bit different because, of course, we had the pandemic, which was insane. But if we look at what happened to the price of Bitcoin back in 2021, we essentially had interest rates at 2.5% back in 2019, and interest rates went essentially to 0 or 0.25 as the global pandemic happened. And you can see that this caused massive amounts of bull market pressure for Bitcoin, for even the stock market after, the March 2020 dip. Yes, here there was quantitative easing, so there was basically no interest rates. Quantitative easing meaning the Fed was pumping liquidity into the markets, and that was one of the reasons why we had new all-time highs and a whole lot of liquidity in the markets. Now, this time, as we've said, is a little bit different, but as a nutshell, interest rates being lowered is a good thing for risk on assets, and that is what Bitcoin is. Now, if we do the same thing with altcoins and you look at the total 3 altcoin market cap, we can do, very similar things. You have interest rates going down in September, October, and December of 2024, and what happens to your altcoins market cap, it also goes up as interest rates are going lower. And over the last, 9 months, nothing's happened to interest rates, and basically recently there's been a dip in altcoins, a little bit of a pump, another dip, and we're essentially back to the same places we were in December of 2024 in terms of total altcoins market cap. So you can see that interest rates definitely have an impact on what happens in crypto, risk on assets, more global liquidity in people's pockets, more favor to go in the stock market and into the crypto markets. Now, a little bit of a caveat to this is, what about global M2 supply? We all know that global M2 tracks 21 central banks and basically gives us an idea of the M2 supply in the world. And usually speaking, we have Bitcoin following the M2 on a 70-day lag roughly. And if you look at that comparison, you can see that again, we have the price of Bitcoin in, the candles here, and you have global M2 in the blue line. So what we're currently seeing here is actually a discrepancy with Bitcoin's price going down as M2 is going up, but M2 goes up until, let's say, the 10th of September or the 9th of September. So just in a few days time, we have, a local peak on a global M2, and the global M2 actually goes down from, September 9th all the way to October 9th. Which, again, historically speaking, September is a bad month for crypto. And if we go with the theory that Bitcoin follows M2 supply, well, M2 supply is going down in September all the way to the first week of October. Potentially, we have another, small dip on Bitcoin. Potentially, it goes all the way to that 50-week moving average. If we go to a weekly chart, potentially, it gets to this point here, bounces on that, and it could bounce at the same time as a global M2 supply is going back up first week of October, starting Q4 and aligning with the theory that we've outlined in several videos. So that's something I wanted to highlight. And if you look at the cycle that we're currently in, we've seen global M2 of the previous cycles. If you look at 2017, look at this green area. We have a major amount of growth when it comes to the M2. Same thing for 2021, but we haven't seen that yet. And we are slowly but surely starting to get rate cuts. And again, if you go on to these different odds, we see that we have, a very good odd for a 0.25 cut in September, but then it continues from there. If, we don't get a 0.5 in September, we're likely going to get another 0.25 in December and potentially even another rate cut in December. So we have around 2 to 3 rate cuts to happen by the end of 2025. That's going to be bullish for Bitcoin. And ultimately speaking, you have to remember that we have liquidity going from Bitcoin to Ethereum to altcoins. So everybody wants altcoins right now, but it's just not the altcoin season. But it does give us the opportunity to continue accumulating some conviction coins that we all know of. Artificial intelligence coin or real world asset coins, layer 1s, layer 2s, and some of those coins are going to do very well once liquidity reaches them. So that's what I wanted to share with you guys today. If you did enjoy the video, make sure you subscribe, hit the like button, check out the private community. There's a first link in the description below, and I'll catch you guys in my next video. Peace.